This is Professor B. Thank you for joining us for another session. We're going to be covering Business 131's problem 19-2B today because it's very similar to the problem on homework 19-2A, and it's a problem that combines all of the various concepts that were covered in this chapter. And it also builds on the previous chapter, which we went through. The topics we went through in it were similar to what we're going to be covering this time around as well, except it builds on it. As we learned in the previous chapter, a manufacturing concern is a bit different than a merchandising business where they actually have to manufacture things themselves. They typically do so by procuring the materials that are needed, which are then used in the working process, where direct labor and factory overheads are added to it. Once the work is finished, these items, or the finished items specifically, move into a separate inventory account called the finished goods inventory. And from there, these items are either sold or held in a warehouse of some type. And that's basically the process that we covered last time. This chapter, we're going to look at how the nuts and bolts work, how various job numbers are used, job sheets are used to describe what's happening with a particular job. This is especially useful for contractors like roofing contractors or folks that are building new constructions, where they want to keep track of all of the direct material, labor, and factory overhead that goes into a particular job so that you can bid for it, right? So let's say, for example, here, job number 71, we knew it cost us basically $5,000, let's just say, to do job number 71. Then that way you can bill the client and still be profitable, right? You don't want to bid a job where you're not profitable and then you end up being out of business. So this is actually very useful in the field, and we're going to go through this particular example today, where we need to exactly follow the flow of manufacturing costs, determine what they are, so that we could be on top of exactly how much it is that we're going to be paying in costs incurred in a particular job, as well as how to bid for it so that down the road when you sell it and it does become cost of goods sold, that you're profitable. All right, so in this problem, they tell us Hildreth Company uses a job order cost system. A job order cost system will make a lot of sense once we finish this problem. And they give us the following data that summarizes their operations for related to production for April 2014. Initially, they tell us that they have purchased materials on account for 147. So for item 1, just basically start by recording the purchase of the material in the materials account and show some sort of a payable to show that we owe money on it, right? Because it's on account. So the first one is actually kind of straightforward. And 147. And we have purchased materials, all right? So I'm just going to record that as material being debited or going up initially. The other side of it, credits accounts payable. And it's basically just telling folks that I'll owe you for this money down the road. So no flow of manufacturing cost has occurred so far. All we've done is purchase some materials, and from it we're going to move on to work in process, but that's just the first step. The next step actually tells us that the materials have been requisitioned and factory labor has been used as follows, right? Materials requisitioned. The word requisition simply means that it has been requested. And so from the stock room, you want to give out materials based on what has been requested. So job number 101 has requested 19,003. 102 has requested some additional items. And for general factory use, such as glue or a pair of scissors or something like that, for general purposes, these jobs have also requested a total of $9,000 in indirect material, right? Material that's not going to directly end up anywhere on the end product that can be traced, but rather in a general way. So the first thing you want to do is you want to add up all of the direct material, and once we do that, we can reduce our materials inventory that was at the beginning. That in the materials list here that you see in the textbook, you'll notice that jobs 101 through 106 have been identified clearly, and then we have separate section here for general factory use. So basically, yes, this is all material, but most of it is direct material that can be traced to a particular job, and 9,000 of it is considered to be indirect material, which can't be traced to a particular job. So when we do add up all of these items, um, we are going to reduce materials with that information, right? So I've gone ahead and done that for you here. I added up all of the materials and I reduced it. I reduced the inventory account called materials on the um, in the section of the balance sheet. And at the same time, I did the same thing for wages payable. I added up everything that's listed here under factory labor, except that the 20,160 cannot be traced to a particular job, so it's of a general factory use in nature. We'll want to keep that in mind, but go ahead and add all of these up as well and put that in the wages payable. In other words, this is the charge that you incurred to pay for labor, and aptly we are going to record that as wages payable. Why can't we just call it wages expense as a debit and then wages payable as a credit like we normally do in financial accounting? And the answer is we haven't sold any of these things yet. So the cost associated cannot be expensed until matching revenue has been generated, right? So until then, we're just going to debit some sort of an inventory account which exists for a manufacturing concern because their situation is so weird, right? So basically, we'll add up all of the materials, put it as a reduction to materials, as a credit to materials. We'll add up all of the labor charges that were incurred for factory and pay the laborers, right? Wages payable, it could have been cash. But the way we're going to separate these items out is going to be interesting next. So for work in process, what I really want here is to distinguish between direct material, direct labor, and factory overheads so that I can keep track of those things separately and bill the client appropriately, right? So all of these jobs, 101 through 106, are going to be direct material, which is going to increase work in process. Direct material goes into work in process, direct labor goes into work in process, and factory overhead go into work in process. But we just want to separate this out for now so that it can help us with budgeting at some point. So I'm going to take a look at all of my direct materials from job 101 through job 106, or I'm going to add up all of these and just subtract 9,000, right? So here I can simply go equal materials that we calculated minus 9,000 because that pertains to work in process, and the 9,000 goes to factory overhead, right? Now this is not going to match because we're still missing the factory labor component. So again, I'm going to take the addition of all of these items, which is up here already in wages payable, and I'm going to subtract the 20,160 component to arrive at just the direct labor from job 101 through 106. And I'm going to put that here in the work in process section. So I already have a formula there. I'm going to go ahead and just seal that off with parentheses. And then I'd like to bring in the total for wages payable minus the 20,160. And that theoretically should be everything except factory overhead components. All right, so that is correct. This again needs to be, the debits need to equal credits, and right now they don't because we're missing the similar item here that we needed to take care of, which is basically 9,000 plus this 20,160 that was used for general purpose. And again, I need a equal there. So if the total of these two is 291,650, this should be 291,650, and it sure is. For factory overheads, no way. For factory overheads, there are additional components we have to worry about, and in Part C, they give us some. Factory overhead costs incurred on account are $6,000. Okay, again, so we need some sort of a payable account here for 6,000 bucks. And what could I possibly use for factory overheads that show that I need to pay it? How about accounts payable, right? And then again, I'm going to increase my factory overheads to show that yes, we incurred some items for 6,000 bucks. That's going to increase my inventory of factory overheads where I'm collecting all of these costs together so that I can down the road have a final number per job. And so I'm going to go ahead and take any additional factory overheads that have been incurred and add them to factory overhead, just like we did in Part B. Again, this is some sort of a payable because it's on account, so I'm just going to go ahead and call it accounts payable. Part D. Depreciation of machinery and equipment, 4,100. All right, again, this is some sort of a cost that we incurred, but we cannot expense directly right now because of the fact that we haven't sold these jobs yet. And what we need to do is we need to uphold the matching principle, which says that expenses should be recorded in the period in which they help generate revenue. So revenues haven't been generated yet. As such, I cannot record it some sort of a depreciation expense. Again, all I'm going to do is increase my factory overheads to accumulate those costs and keep track of the items being accumulated in depreciation as we normally do. So credit accumulated depreciation for machinery and equipment, and debit factory overheads. All right, so far we have been accumulating indirect costs in this account called factory overhead, but we haven't really applied it to any particular job so far. It's just been sitting there and accumulating, much like materials. Remember, with materials, we purchased a bunch of materials in the beginning. We paid for them with an IOU, and they just sat there until they were actually used up or picked up by a job. That's when we reduce the materials and we put them in work in process or factory overhead, depending on whether they were direct or indirect. Similarly, we've been accumulating a lot of these various costs that were indirect in nature without really classifying how they were being applied to a particular job. We were just putting them all in this account called factory overhead. And I don't want you to worry too much about this account because eventually it will be closed out. But for now, we've just been accumulating factory overheads in this account called factory overheads. A couple things about that. Factory overheads normally include all manufacturing costs except direct materials and direct labor. Factory overhead costs come from a variety of sources, including indirect materials that come from a summary of materials requisition, like we did previously. Indirect labor comes from salaries of production supervisors and other employees such as janitors. Factory power comes from utility bills, and factory depreciation comes from the accounting department computations, right? So we get all of these various things which we have been accumulating in our factory overhead account. However, factory overhead is different from direct labor and direct materials in that it is indirectly related to the jobs. That is, factory overhead costs cannot be identified with or traced to a specific job. For this reason, we actually allocate the factory overhead costs to jobs. This process, the process by which factory overhead or other costs are assigned to a particular job, known as a cost job or cost object, is called cost allocation, right? Where now that we've accumulated all of this factory overhead, now we're going to allocate it to specific jobs. And the reason we have to do all of this is because of the nature of factory overhead. It cannot be directly related, it cannot be directly traced to a particular job. So we need some sort of a activity base that helps us do that. The factory overhead costs are allocated to jobs using a common measure related to each job. This measure is called an activity base, right? Because factory overheads are different than other costs, they can't be directly traced to a particular job. We need to allocate them in some sort of a systematic and rational manner. And sure enough, in part E, they tell us that. In part E, they tell us, hey, the factory overhead rate that you need to use is $40 per machine hour. All right. I've kind of already done this for us, so I'm just going to go ahead and redo it. Just so I can explain it. Better for you guys. All right. So in part E, they tell us these various jobs, 101 through 106, have spent these many hours on a machine, on a particular machine, which the company felt was a good way to allocate the factory overheads. And now we need to do that, right? So for all of these jobs, the total hours the machine was used, it could have been a chainsaw machine, it could have been a drill, whatever, right, was 1,012. So in part E, what I need to do is I need to take a chunk of factory overhead that we have been accumulating so far and now apply it to work in process so that I can show that in each of these jobs, work has started. We've started to use this overhead to produce something. And again, for a total of 1,012 at $40 a pop is what we're dealing with insofar as factory overhead allocation is concerned. So of course we want to reduce factory overheads because so far we've been building it up, and now we're going to actually, and building it up here again, and now we're going to actually go ahead and allocate it to work in process. We're going to actually move it from factory overhead to work in process. And we've seen that in one of our previous slides right here, where we actually store a bunch of things and we started applying we started applying those materials in direct labor and everything else, all indirect stuff, all indirect factory overheads to the particular jobs in question during the production process. And we just want to keep track of it, right? That's all we want to do. And we employ this account called work in process to show, hey, this is the stuff that's actually in process. All right. In the next step, item F, they tell us jobs have been completed. 101, 102, 3, and 5 have been completed. And they want us to record the completion of these jobs somehow. Before we get that far, though, what we need to do is actually compute these components for item F individually for these jobs, and then we can actually see what we need to do with the journal entry. Okay, so they want us to determine the direct materials for job 101. Gee, where have I seen that before? That was up here, folks, in the materials section, direct materials, and that's all they're looking for, direct materials for job 101. I'm just going to jot that down here. Direct labor, they also gave us that. And they wanted us to now compute the factory overhead, which we now know can be recorded as $40 per hour times 154 hours for job 101. And of course, if you want to add up all three of these, you should be able to end up with the total cost that was incurred for job number 101 at $44,980. And again, why is this important? This is important because we want to build a client in such a way that we are competitive, yet at the same time profitable, right? So having this information is so key because it lets us be competitive and survive and still thrive. Was this difficult? No. They gave us the direct material information. They gave us the direct labor information. And now we have the factory overhead that we can easily compute because we understand that factory overheads have to be allocated. And I'm going to go ahead and add up the rest of them in the similar fashion and then end up with a total at the end here. All right, so now that I've gone ahead and computed all those items for you, I've gone ahead and given a total down here to denote that the total cost of jobs completed 101, 102, 103, and 105 is 175,090. And this is a movement of costs into finished goods inventory, right? These are the items that have been finished, completed with respect to direct labor, material, and factory overheads. And so I want to get rid of that from work in process, get it out of there and moved into finished goods. And I'll show you why we need to do that down the road. But for now, compute the amounts, move them into finished goods inventory. And what will I reduce? I'm going to reduce work in process, where they had been sitting there the whole time and they were being worked upon, but now we need to reduce that inventory account and move these finished jobs, or rather the costs pertaining to these 4 jobs, into finished goods to show that I've moved it into a separate phase of construction, the process. I've actually finished working on them. Okay, so now that we've recorded that, let's move on to item G. The TELUS jobs were shipped and customers were billed as follows. Although this is probably a very vague way of telling what's going on, what you need to understand is when customers are billed, that means some sort of sales have occurred, right? They're being vague about this, but basically when you ship something to a customer and the customer has been billed, it denotes that a sale has occurred. The word bill is a hint for you to record some sort of a receivable. And of course, we know that a receivable is an asset that increases via a debit. And so now all we have to do is record the associated sales with that. And they tell us job 101, job 102, and job 105 have been sold. And so now we can actually determine the sales revenue that needs to be recorded for all 3 of them. And the first one is 62,900. They give us this information. So I'm just going to go ahead and add these items up. 80,000 plus 700 plus 45,500. And of course, I'm going to increase my sales with that information. And so that's a credit to sales revenue, or sales is fine. And then I want to show that I have that money owed to me through accounts receivable. So I'm going to increase accounts receivables. And that is how we take care of an entry when we have finished a job and we have sold it and we've billed our clients for it. The other side of this equation has to do with recording cost associated with sales. And if you recall this from your previous accounting classes, you'll realize that that in order for us to record cost associated with a sale, not only do we have to record the cost of goods sold, but we also have to record some sort of a reduction in our inventory. And this time around, we're going to identify jobs 101, 102, and 105 as the ones being sold. So the cost associated with them, 101, 102, and 105, these 3 costs we need to add together to determine what it is, what it cost us to sell these items, sell these 3 jobs. Now we get to record the cost associated with it on the income statement and reduce finished goods inventory, because like we said previously, things flow, right? So from the finished goods, when items are sold, we need to reduce finished goods and increase cost of goods sold. That's what's happening here. We need to reduce finished goods and inventory account, which of course reduces via a credit, and then increase some sort of an expense or cost associated with the sale of goods, known as cost of goods sold, on the income statement. And of course, I've already identified the three items that we need to add to get to that point. Again, the cost associated with job 101, 102, and 105 is as follows. And again, I'm just holding down the control or the command key on Mac while I'm clicking on these items, blue, red, and purplish, whatever. And I'm going to, of course, have the same amount for the debits. Okay. And I think you were supposed to do this down here, but I did it all in one go in a formula. So if you want to just copy this information down, that'd be fine as well. I guess I should have read my own notes. So yeah, do this part first, and then you can add up all three of them to determine that, yeah, 142,610 is the actual amount we need to record. Okay, so we got pretty far on all of this. We were able to compute exactly the impact which should be on the income statement as well as the balance sheet accounts. And we've been tracking all of these jobs on a per job basis. And that's why this is called job order costing, where we're not only concerned about the flow of manufacturing costs, but we also want to get information on a particular job so we can build a client accordingly, be competitive, and thrive in this business, right? So we have all of that. Now it's a matter of simply filling out some of this information down here, which we've already figured out up here. So it's going to be a lot easier than the analysis we've done so far. And in section 2, that's what we're going to do. We're going to actually work on T accounts, where we just want to culminate all of the costs, either debits or credits, to each of these accounts. All right, so they ask us to work on work in process first. So basically, I'm just going to go down the list here, and anytime I find work in process, I'm going to plug it in. Of course, a work in process is being debited here, and it tells us it's part B, so I know it's going to go here. They tell us that in part E was debited again. Sure enough, it was. I'm going to go ahead and copy that from there. And they tell us that something moved out of work in process, which probably meant a credit. And that's, of course, in item F. So I'm going to pick that credit here. And of course, now you know probably that when you have debits and credits, you want to add up all the debits on the left, add up all the credits on the right, and smash them together so that the bigger number wins. So in this case, it sounds like the debits are going to win. I'm going to simply use a formula and subtract the credits from the total. So the debits. Similarly, for finished goods inventory, we just want to figure out how much stuff we have in our finished goods inventory warehouse. They tell us that it was debited in item F. So sure enough, I do see that here being debited. I see that item was credited in part G. Sure enough, it was finished goods. And so what this came in here, and of course we sold some of it. And so that's the balance in finished goods inventory. Do we have anything in the unfinished jobs? Sure, we sure do. 104 and 106 were never finished. Nonetheless, we can use the same logic we have been all along to determine their direct material, labor, and cost. And I'm going to just go ahead and move this so we can see all of that a little bit better still. So if we were to look at unfinished jobs, specifically in items 3, which are 104 to begin with, so we know now that how to compute the costs per job. We're going to identify the direct material cost, which was 38,200 for job 104. Direct labor for job 104 was 36,500. And just to confirm, 38,200, yep, and 36,500, yep. And now we need to identify the factory overheads. Again, we've already computed this all up here, so I'm not going to go through the logic again, but basically we needed to allocate the costs, if you recall, which was done somewhere around here. Yep. And factory overheads, we said for job 104. Oh, we haven't done that yet. So let's find out job 104. It was 40 bucks, if you recall, per machine hour. And for job 104, we have 238 for machine hours. And for 106, let's, now that we're in the column, 106, 174 times 40. And the direct material and labor they give us up here. Oops. Up here, I mean. There's just so much information on this problem. Thank you for being patient with me. 106, 18,000 even for direct material. Direct labor, 18,700. And we already computed the factory overheads. All we got to do now is simply just add up all these items to come up with a total cost of this one particular job. I'm just gonna copy that down here just to ensure. Yep, and the total of those two goes here, 127. This is the work that is unfinished, thus that represents the balance of work in process as of the last date of the month. All right, let's see if there's something else that's needed here. The split's messing me up, so I'm gonna get rid of it. And let's take a look at part 4. Part 4, they want us to determine the schedule of completed jobs, what happened with the particular job, in fact 103 specifically. So we know job 103's direct material that was given to us is 13,440. Direct labor was 14 even. And factory overhead will be at 40 bucks an hour for job 103, 126 times 40. And again, I'm just going to copy and paste this formula because it's the same thing. Addition of all three of those items, 32,480. And that's also corroborated up here in the finished goods inventory, right? These are jobs that are done, not yet sold, which was the case up here, right? In this in this part 1. And these are, and also it's separate from unfinished jobs that of course have not been sold. So unfinished jobs total, finished jobs that should be in our finished goods inventory where nothing else is needed, and items that were finished and sold simultaneously were all in this section, part G. Okay. So I hope you were able to see the flow of costs from one stage to another. Why we call this a job cost ordering, because we are trying to gather and categorize cost per job. And again, we've mentioned the benefit of doing that is that it helps us bill each client in a way that is not prohibitive of making a profit, yet it keeps us competitive. Anyhow, if you have any questions, please feel free to send them to me. And of course, if you need to clarify any of these things, I'll make time for you. Just reach out and let me know where you're struggling, and I'll help you out. Other than that, have a nice day ahead. Thank you.